At the moment, Tesla shares are trading for less than $113. What do investors in Tesla expect by the end of January 2023, and what kind of price might the markets see? Even the most skilled market experts find it challenging to project the long-term price of Tesla stock because of its seeming volatility. However, what is the estimated valuation of Tesla stock by analysts for the upcoming months? In 2022, Tesla Motors Incorporated's share price started at $352.26. The lowest price was $109.10 on December 27, 2022, which indicates a yearly decline of more than 50%. Experts estimate that in the first half of 2023, the price of Tesla stock will rise to $246, a significant gain over current levels. The price may increase by a further $54 in the second part of the year, bringing the total to $300, an increase of roughly $200 from the current amount. Tesla revealed earlier this month that it would reduce output at its Shanghai factory in December 2022 compared to November 2022 by over 20%. Around the nation, demonstrations against China's zero-COVID policy have erupted. At full capacity, the Shanghai factory can produce 85,000 automobiles each month. However, Tesla shares have already noticed a substantial impact from Musk's acquisition of Twitter. Elon Musk, the CEO of Tesla, paid $44 billion to acquire Twitter on October 27, 2022. Financial analysts claim that this is one of the most expensive bargains ever. Musk announced the firing of the CEO and every other high-ranking employee of the corporation in his most recent tweet. Musk sold 15% of Tesla stock in order to raise $15 billion. It will be a relief to Tesla's stockholders that Musk has committed not to sell any further Tesla stock now that the acquisition has been completed. Analysts predict this will lead to a spike in the stock price, but many remain doubtful of Musk's abilities to lead Tesla, SpaceX, Twitter, and his other businesses. Ever since the settlement was announced, the price of Tesla's shares has dropped by 34%. Between April and now, the market value of Tesla stock has decreased from $1.14 trillion to $718 billion. It is estimated that Twitter will pay interest on its debt for about $1.2 billion a year. In the event that interest rates rise further, the total will grow dramatically. Second, based on estimates from industry experts, Musk wants to see a rise in Twitter's income and profit by 2025. Fearing that Musk's focus on turning around Twitter may divert him from Tesla, investors are concerned. But the Tesla Cybertruck and the $35,000 and under Tesla car are becoming more and more significant to the business. The company's hint that the new Cybertruck will be ready within the next year has a decent probability of coming true, especially considering Tesla's devoted client base. The Model S marked the beginning of Tesla's commercial vehicle production line, but the company didn't gain much market share until it started producing large quantities of the less expensive Model 3 sedans. Tesla must be more reasonably priced so that customers can purchase it. Even with concerns about inflation and sluggish economy, Elon Musk predicts a decrease in the demand for Tesla electric vehicles in Q4. He still intends to sell every car that is produced. Transportation problems are to blame for the delivery deficit and the resulting rising cost. Analysts predict that Tesla Incorporated will put its existing business environment to the test in the coming years, and that improving inventory management will be crucial for the company in 2023. However, the management of Tesla is still certain that they have an abundance of supplies and that they will quickly increase production at new plants in Austin, Berlin, Shanghai, and other locations. Morgan Stanley analyst Adam Jonas cut his price target for Tesla shares on Monday from $383 to $353. One reason why the valuation might increase if Tesla management discloses its plans to repurchase stock is production challenges. As the price of Tesla's stock fell to a 2-year low, investors demanded that Elon Musk, the company's CEO, and the board repurchase shares. Tesla's valuation increased by around $700 billion in the previous year. Musk stated on Tesla's He3 earnings call that the company is preparing a sizable repurchase for the upcoming year, most likely costing between $5 billion and $10 billion. Although the Tesla board will make the ultimate choice, existing shareholders would hold a greater stake in the business if the number of outstanding shares was decreased through market purchases. Alexandra Merz, a prominent figure and enthusiast for Tesla, has started a Change.org petition calling for a stock buyback by the end of the year. Merz claims that by doing this, Tesla would be able to take advantage of its drastically discounted stock price and avoid paying the 1% excise tax that will be imposed on buybacks exceeding $1 million starting on January 1, 2023. As recommended by Merz and other investors, a repurchase of Tesla's shares would demonstrate confidence in the company's future performance and return money to shareholders. Out of 5,807 petitioners, one stated, "I'm a huge fan of Tesla and a former stockholder, but I've been forced to jump to the dark side to maintain my capital. I was able to short the stock and recover half of my losses. Before I make another Tesla investment, I need to see some form of action from the board. A good buy would be a good place to start." The board of directors still believes that Tesla is a worthwhile investment. For a number of reasons, investors' confidence in Musk's ability to successfully lead Tesla has declined in recent months. Although the price of Tesla stock has been falling, investors are expecting a rebound by the start of 2023. Research and development as well as execution skills at Tesla are responsible for several improvements, including effective management of chip shortage. Tesla switched out chips and changed its programming to address the shortage of chips. Analysts predict that the EV industry will keep expanding, with Tesla standing to gain a great deal as it maintains its leadership position. Tesla has a major technological and electric vehicle manufacturing advantage over its competitors, according to Deutsche Bank analyst Emmanuel Rosner, because the stock split has made Tesla stock considerably more liquid and available at a lower price, if not value. It will be critical for Tesla to have a year in which it maintains its high volume growth, expands into new markets with the Cybertruck and Semi, maximizes its manufacturing footprint, and takes advantage of IRA, Inflation Reduction Act, incentives. As Rosner noted, we see enormous potential for fully autonomous vehicles, with the ability to boost the gross margin by 80 basis points and achieve a 5% improvement in the global take rate on new sales. This is not, however, the situation in our basic case scenario. Due to these factors, we anticipate that the 2023 street forecasts will be updated upward. Wall Street attributes the recent upsurge in investor morale to optimism about new government regulations that will promote electric vehicle (EV) adoption in 2023 and beyond, as well as Tesla's exceptional performance in the first 2 quarters of the year. In August, investor morale had declined slightly as a result of worries about sell-offs in foreign markets. While we predict a more modest increase of 200 basis points in gross margins to 31.5% in 2023 from 29.5%, a 300 basis point improvement from 2022 levels, and an increase in adjusted EPS of $7.15 from $6.60, which is significantly above the consensus estimate of $5.82. Rosner estimated cost savings of $3,200 per vehicle, or 5.5% of the ASP. Despite its lower prices, Tesla will still have other benefits in 2023. If Tesla introduces its Cybertruck and Semi vehicles as Rosner suggests, demand might increase. We anticipate higher operating and gross margins in the future as volume increases. According to Rosner, Tesla is one of the most fascinating tales in the automobile business because of its pricing power. The company also benefits from a superior cost structure, well-executed plans, guaranteed supply, and new considerable capacity to support quick expansion. Please hit the like button on this video and subscribe to our channel if you'd like to receive updates on Tesla stock. I appreciate your time, and I hope to see you in the next video. Music. Despite its lower prices, Tesla will still have other benefits in 2023. If Tesla introduces its Cybertruck and Semi vehicles as Rosner suggests, demand might increase. We anticipate higher operating and gross margins in the future as volume increases. According to Rosner, Tesla is one of the most fascinating tales in the automobile business because of its pricing power. The company also benefits from a superior cost structure, well-executed plans, guaranteed supply, and new considerable capacity to support quick expansion.